Imagine this, every single day around 9.6 trillion US dollars changes hands in the Forex market. While the entire crypto market is only worth about $3 trillion in total, yet one of these markets can move 5 to 10% in a single day while the other usually wiggles less than 1%. So which beast do you want to ride? The 24/7 roller coaster of crypto or the deep liquid ocean of Forex? In today's video, we're putting crypto versus Forex trading head to head. Both markets are exploding in popularity, both offer serious opportunity, and both can wipe out an unprepared trader. By the end, you'll understand the key differences in volatility, liquidity, trading hours, and regulation. So you can decide which battlefield actually suits you. If you're new to online trading, you've probably asked, should I start with crypto or is Forex the smarter move? On one side, you have cryptocurrencies, a market that has grown into roughly a $3 trillion asset class, with coins like Bitcoin and Ethereum leading the charge. But this same market has seen drops of over $1 trillion in just a few weeks during sharp sell-offs. On the other side, you have Forex, the foreign exchange market, the biggest financial market on the planet. Daily FX turnover climbed from about $7.5 trillion in 2022 to around $9.6 trillion per day in 2025. That means more money trades in Forex in a single day than the entire crypto market is worth. Here's the dilemma most traders face. Crypto looks attractive because of huge moves and 24/7 access. But that also means wild swings, sudden crashes, and a lot of emotional stress. Forex looks more professional and heavily regulated, but the moves can feel slower, and many beginners think it's boring or too complex. Both markets offer the potential for high returns, the very real possibility of significant losses, and a steep learning curve. The challenge is not which market is best in general. The real question is, which market fits your risk tolerance, your schedule, and your personality? Let's break this down with 4 key comparisons: volatility, liquidity, trading hours, and regulation. 1. Volatility. How violently does price move? Studies and broker analyses consistently show that major crypto pairs like BTC/USD can easily move 3 to 5% in a normal day and 5 to 10% or more around big events. In contrast, major Forex pairs such as EUR/USD or GBP/USD typically move well under 1% per day in normal conditions. Crypto volatility equals huge upside potential, huge downside, fast emotional swings. Forex volatility equals tighter ranges, more controlled price action, but still enough movement for skilled traders. 2. Liquidity. How easily can you get in and out? Forex is a monster in terms of liquidity, with trillions traded daily. Major pairs like EUR/USD, GBP/USD, and USD/JPY usually have tight spreads and deep order books. Crypto is mixed. Large coins are liquid, but smaller altcoins can be thinly traded, with wide spreads and big slippage when markets move fast. Forex generally offers more consistent execution, especially for larger sizes. Crypto can have excellent liquidity in top coins, but drops off quickly as you go down the list of thousands of tokens. 3. Trading hours. When is the market open? Forex trades 24 hours a day, 5 days a week, roughly from Monday morning in Asia to Friday evening in New York. Crypto trades 24 hours a day, 7 days a week, 365 days a year. There is no closing bell. Crypto's 24/7 nature is exciting, but it also means news can nuke your position while you're asleep. Forex at least gives you weekends to reset. 4. Regulation and protection. Who's watching? Forex is heavily regulated. In major hubs like the UK, Forex brokers are overseen by regulators such as the Financial Conduct Authority. Crypto is far more unevenly regulated. Buying and holding spot crypto is generally allowed in many countries, but derivatives and leveraged products are often restricted for retail traders. In Forex, you benefit from a mature regulatory environment, but leverage rules and product access may be stricter. In crypto, you get innovation and new products, but also exchange failures, hacks, scams, and regulatory crackdowns as real risks. So, which is better for you? Instead of declaring one winner, think in terms of trader profiles. Crypto might suit you more if you have a high risk tolerance and can handle big swings in your account. You're comfortable with fast, aggressive moves and sudden trend reversals. You like following technology, narratives, on-chain trends, and sentiment. You can manage the emotional pressure of a market that never sleeps. In return, you get access to a market where 5 to 10% daily swings can create massive opportunities for those who are disciplined and experienced. Forex might suit you more if you prefer deep liquidity, tighter spreads, and more orderly price action. You want a market that is well established and tightly regulated. You like trading around macroeconomic data, interest rates, and central bank policy. You prefer structured trading sessions and having weekends off. Here, you're trading in the largest, most liquid financial market on earth, with around $9.6 trillion changing hands every day. In reality, many advanced traders eventually blend both, using Forex for structured, high liquidity setups and crypto for high conviction, higher risk plays. But if you're just starting, it's usually better to focus on mastering one market first, build a track record, then consider expanding. To recap, crypto offers explosive volatility, 24/7 access and huge upside, but with equally huge downside, regulatory uncertainty and emotional stress. Forex offers massive liquidity, tighter spreads, strong regulation and more predictable sessions, but requires patience and discipline to profit from smaller percentage moves. There is no universal winner, only the market that best fits your risk profile, your lifestyle and your temperament. Now it's your turn. Drop a comment below. Are you team crypto, team Forex or both? What's been your experience so far? Check out the other videos on this channel for step-by-step trading strategies, risk management tips and market breakdowns. And remember, this video is for educational purposes only and is not financial advice. Trading Forex, CFDs and cryptocurrencies involves high risk. You can lose some or all of your capital, and past performance is not a reliable indicator of future results. Always do your own research and only trade with money you can afford to lose.